Welcome to the Killik & Co podcast for the 20th of January. Last week, equities managed to progress further and now stand quite close to the all-time high achieved on the FTSE 100. Many markets around the world have already surpassed this level. In fact, the FTSE 100 is one of the laggards across the globe to reach it. But as I say, still 100 points shy, but this first chart sort of puts the sort of recent move into some context and takes us back to that date at the end of 1999 where we didn't quite get to 7,000 but around 6,930, so around about 100 points above this level. So attention this week as to whether we can make further progress and possibly take out that top level. If we were to look at last week, just a few comments. On Friday we had quite a surprise unscheduled announcement from Royal Dutch Shell. This was the first announcement from the new CEO, so maybe an element of kitchen sinking the numbers, but nevertheless he was commenting upon the fourth quarter numbers for Royal Dutch Shell, which were falling well short of expectations. He said it's not good enough and not what he expects of Shell. But the market reaction initially thought to be maybe a 5-6% correction on the share price, ultimately ended up being just around 2%. And it means we felt that possibly meant that the market was focusing more on the fact that this lays the groundwork for even more extreme levels of restructuring within the group that he could now push through. And clearly this is a business that is capable of generating a tremendous amount of cash. So therefore, if he can start to get hold of some of that cash and bring that sort of more transparently through the P&L, then of course we could be looking at a brighter future. That's possibly the conclusion from Friday's poor statement. Nevertheless, as I say, the shares, having had a sort of fairly decent start to 2014, did reverse some of that gain. With a yield of north of 5%, we do retain our recommendation on that stock as a buy. Just to turn into, therefore, some points for the week ahead. This is the diary. In terms of Monday morning, we've had limited news flow this week. At the weekend, Deutsche Bank issued a profit warning. Their shares are trading down around 5% at the moment. The fixed income division of Deutsche Bank was struggling in the fourth quarter, and there is some read across to other banks that have investment banking operations like Barclays that were trading around about 2% lower. But a relatively quiet start. That's not to say that it's going to remain the case for the rest of the week. In fact, corporate earnings, particularly in the UK, do start to pick up. A full list here of those numbers. In particular, we're looking at Unilever. Unilever is a buy recommendation for us. There was around a 20% correction on the share price towards the sort of second half of last year as emerging market growth slowed. There's undoubtedly continued headwinds in the emerging markets at the moment, and we do expect that Unilever tomorrow will be reporting concerns of slowing growth in that area. It's what can they do to address it? There are plenty of costs undoubtedly to be able to take out of the system if they see this is more structural than cyclical. So some commentary on that will be sort of closely scrutinised. That for one is one which we'll be looking at. Verizon, Q4 numbers from Verizon. This is going to be more relevant to a wide range of holders very shortly as the Vodafone reconstruction will take place, and inevitably some investors will end up with Verizon communication shares. So fourth quarter numbers coming out from that company. We will be following that up with a research note. Some mining news out on Wednesday, BHP Billiton. Certainly the news from Rio Tinto for recently was more encouraging on the iron ore side. Good production numbers from there, and we are seeing just a little bit of positive support coming in for a mining sector which did have a poor 2013. So those are the sort of key numbers for this week, but plenty to come through. In terms of macro news, just keep an eye, Bank of England interest rate minutes, and also the UK unemployment rate. Now this does have some relevance, we think, as the UK economy is now beginning to build some real traction. Indeed, last week we had the December retail sales numbers, an expectation that they grew by 0.3%. Well, they actually grew by 2.6%, so much better than anticipated. It did cause quite a sharp rise in the value of sterling. This chart possibly not necessarily showing it the materiality of the move on sterling last week, but it was over 100 basis points intraday, indicative again of potentially the move towards a higher level of interest rates. Now, why it's important, we've got this these notes out on Wednesday. This unemployment rate again appears to be moving down much faster than the forward guidance that the Bank of England Governor Mark Carney was indicating as part of the forward guidance for last year, and therefore it does really ring the bell as to what is going to happen with rates. The saving grace at the moment for those that are not looking to see rates go up is the fact that inflation is heading back down to target at 2%, with expectations in the near term that inflation is going to fall a little bit further, not necessarily stop at 2%. And it's the low inflation, not just in the UK but in the US and Europe, which at the moment is allowing this very loose monetary policy to continue to exist. In terms of stocks to watch for this week, well, we've put a buy note out on Travis Perkins. This company, it is a FTSE 100 business, and the report for the fourth quarter will be due on February the 26th. Undoubtedly, we are seeing an upturn in construction at the moment, and Travis Perkins remains quite operationally geared towards an upturn, with its builders merchant chains serving not just the commercial markets but also the residential markets through Wicks. So we're expecting better progress. 2013 was a slow start for Travis Perkins, but that momentum built throughout the year, and we expect that to continue through 2014, which could well drive some upgrades for the company. So that's a company we have a buy note out on. Your broker will have a copy of it. Do please ask him for a copy if you want to see more information on Travis Perkins.